This indeed is the level for the long bond auction on the 30 year. So these levels are still in place. So we are still long above that price. The demand zone is intact. The demand zone is intact, guys. So this is something that we understand now, isn't it? This is something that we understand to be a market reality of bullishness. So we want to be buying it. That's just pretty much as simple as it gets. We want to be buying it, but let's see if we can find any reasons to buy it. Well, oil. Number one reason is oil. Now, obviously, with the oil price, we can see that there was a reason to buy the bottom edges. There was a reason to sell the top edges. There was a reason to sell the top edges. And there was a reason to buy back into the pullback here. The divergences started to show up here. The spike in oil happened after the buy trade in bonds. So there is a reason to do business on the oil. What about the Japanese yen? Well, there's a reason to do business on the Japanese yen. There was a reason to buy it here. There was a reason to sell it here. There was a reason to sell this top edge here. There was a reason to sell into this top edge up here. There was a reason to sell the pullbacks here. There was a reason to buy the bottom edge here. So that's agreed as well. Let's take a look at the inflation break-evens. As we look at the inflation break-evens, it's difficult to get much of a read on the overall shape of this. But you can see there was definitely reasons to buy this pullback. The top edge seems to have gone explosive to the upside without the tips markets really giving as much. And then it stalls. Was there a reason to buy the bottom edge? Well, yes, because the tips markets had just turned at the very, very bottom tick price here. So there was a reason to buy the bottom edge. Not much of a reason, but a reason. As we start looking at the curve, was there any belly information that was available for these trades? Well, the first thing we could probably agree with, and remember, we usually take the knob spread off to start with, is the belly looks very, 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 very cheap here. So obviously, if the belly's cheap, one would imagine that's going to put quite a sizable amount of sell pressure into bonds from the top edge. The belly is very, very, very expensive here against the front end of the curve, so the probability is that we should be able to make money buying the down-ticking bond. That's pretty clear, yes? Expensive or cheap bellies? You may be saying, why? Why would that be the case? Why does that make any kind of sense? Because obviously these two lines make up what? These two lines make up something, don't they? These two lines make up something called the 2's 10's. The most important curve on the planet is made up by these two lines. So obviously, if we start steepening the belly and we start flattening the front end, what kind of shape of curve is that? Think about it. So if we go back to this, if I said to you, right guys, what direction are bonds going to go in? What direction are bonds going to go in this scenario here? And I want to make a decision here. I want to try and make a decision at that point. Hold on a second.
And there's the open. Mike said, take your shot. Yeah, if it breaks below 93, could be in for a nice trade, right? That's a bummer. To work it again.
All right, guys. So this is sorry about that.
As well.
So what is this? So we've obviously got the 5's 10's here. So we've got the 5's 10's and we've got the 2's 5's here. So we can obviously label off these charts so that we understand what we've got. So obviously if the 2's 5's is very flat and the 5's 10's is very, very rich, the curve is obviously steep. The curve is obviously steep. So if the curve is steep, this must be a steep curve, right? This is a steep 2's 10's, right? If the curve is steep, then bonds must be very cheap. So obviously, if we start to look at that from purely that curve change, and we start saying, well, the possibility of that staying like that is limited. So I'm going to be looking at this idea here. In that scenario, I would be looking at buying those cheap bonds. Why? Because I'm expecting to see a curve flattener. I would expect to see a curve flattener, so therefore I'm expecting to buy bonds. Why would you expect to see a curve flattener? Well, perhaps the knob spread is getting murdered. Perhaps the knob spread is getting murdered. Perhaps the knob spread is absolutely exploding to the north side. Perhaps the knob spread is doing certain things, but perhaps oil's doing certain things, or perhaps the S&P is doing certain things, or the inflation break-evens are doing certain things. There's always reasons why you might expect to see a change in the curve. And the point is, if we can start to see and understand that there is that type of change setting up, we start putting ourselves into the right vicinity to take advantage of the 2's 10's adjusting. Because the 2's 5's to the 5's 10's shouldn't diverge as much in these environments. They are a good relationship. They are a very strong parallel relationship. When they do diverge, that's a real nice narrative to do bond trading against, assuming we're in the right location for the bond, of course. So if we're going to be selling, if we're going to sell the belly, if we start thinking about the sell in the belly, we can start to look at that trade as a possible top edge, bottom edge type of idea. And we would expect to be able to buy the bottom edge bond selling the top edge belly, or if it flips over, buying the belly and selling bonds at the top edge. But this is just a starting point. But it's a good way to look at your sentiment of the trade. Because obviously if we've got this sentiment, that sentiment to the left is obviously a bullish sentiment. What we expect is a bearish sentiment. Because obviously a 2's 10's flattener means buying bonds, and that probably means selling obviously something like equities and oil. So this is a sentiment shifter, isn't it? Once we see that sentiment flattening out, we start thinking to ourselves, the sentiment is busted. what are we going to be expecting to see from this? And obviously, depending upon how the spread evolves, we can start to make some great trade ideas. But we'll obviously cover this in classroom this afternoon. We've got a lot of stuff to look at in terms of the dollar as well in this type of narrative. But yeah, it kind of starts to make sense in terms of the buy on bonds at the bottom edge. That's where we'd went to. But sorry, I'm getting a few phone calls from tech guys just now, which I need to do. Obviously, just they've got some questions about some stuff we wanted done. So it is what it is. It is what it is.